Crypto regulation shakeup. SEC wins $1.1 million fraud case as California trials Bitcoin fees. California. Crypto regulations. Securities and Exchange Commission. Journalist. Tanzeel Akhtar. Journalist. Tanzeel Akhtar. About author. Tanzeel Akhtar has been covering the cryptocurrency and blockchain sector since 2015. She has written for The Wall Street Journal, Bloomberg, CoinDesk, Bitcoin Magazine, and Bitcoin.com. Author profile. Share. Copied. Last updated. June 5, 2025. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. This week in crypto regulation, U.S. lawmakers and state officials drew attention across the digital asset sector with developments ranging from delayed disclosures and enforcement criticisms to landmark crypto-friendly legislation in California. The regulatory environment continues to evolve, sometimes sharply divided between federal hesitations and state-level innovation. Texas congressman slammed for delayed Bitcoin disclosure. In a striking development, Texas Congressman Brandon Gill, Republican Texas, came under fire for failing to disclose his Bitcoin purchases in a timely manner. According to a report from Open Secrets, Gill bought between $100,001 and $250,000 worth of Bitcoin on January 29th and February 27th. However, the disclosures didn't appear until May 30th, well beyond the 45-day window mandated by the Stock Act, which is designed to prevent insider trading by public officials. The freshman congressman's failure to comply with basic transparency protocols has sparked criticism, particularly as lawmakers increasingly shape crypto policy. The delayed filings raise questions about oversight and ethical conduct amid the sector's surging political relevance. Crypto advocates may see Gill's holdings as a sign of growing interest within Congress, but his misstep shows the need for stricter accountability when digital assets enter the halls of power. SEC Chair Paul Atkins calls out enforcement-first approach. Over in Washington, SEC Chair Paul Atkins delivered pointed remarks before the Senate Appropriations Subcommittee this week, criticizing the agency's previous stance of regulation by enforcement toward crypto. Atkins argued that the former approach stifled innovation and inadvertently opened the door for fraudulent behavior to flourish. Enforcement without clear rules sends the wrong message, Atkins said, emphasizing the need for proactive, rules-based regulation. He also praised the SEC's revamped crypto task force, describing it as a key player in developing a more nuanced and transparent regulatory framework for digital assets. This shift in rhetoric from the SEC's highest office marks a potential turning point in crypto regulation. For years, the agency's ambiguous stance has frustrated industry players. Atkins' testimony could pave the way for more constructive engagement with blockchain projects, if it results in real policy changes and not just regulatory lip service. California leads with progressive crypto legislation. While federal agencies wrestle with regulatory philosophy and enforcement, California is pushing ahead with bold legislative moves that could redefine state-level crypto governance. The State Assembly passed Assembly Bill 1180 with unanimous support on June 2nd. The bill authorizes the Department of Financial Protection and Innovation, DFPI, to create a pilot program allowing state fees to be paid using digital financial assets. Assemblymember Avelino Valencia, the bill's sponsor, called the move a turning point for public sector adoption of financial technologies. This marks one of the most concrete steps by any U.S. state toward integrating crypto into official government operations. Should the bill progress into law, California could serve as a testing ground for broader crypto utility in public finance, potentially setting a template for others to follow. Hot on the heels of AB 1180, another bill, Assembly Bill 1052, also cleared the State Assembly in a 78-0 vote. AB 1052 seeks to modernize unclaimed property laws, particularly how dormant digital assets are handled. If passed by the Senate, the law would prevent dormant crypto held by custodians, like exchanges, from being automatically liquidated. Instead, these assets would be safeguarded in their native form by a licensed custodian. This legislation specifically excludes self-custodied wallets from its reach, a key detail for privacy advocates and decentralization purists. Together, these two bills reflect a state legislature that understands the nuances of crypto and is willing to embrace its potential while mitigating risk. SEC secures $1.1 million judgment in crypto fraud case. Elsewhere, the SEC notched a courtroom win against bad actors in the crypto space. A federal judge in Georgia issued a default judgment on June 3 against Keith Cruz, who was accused of orchestrating a fraudulent crypto investment scheme. Cruz failed to respond to the SEC's lawsuit, resulting in a $1.1 million penalty that includes disgorged profits and civil fines. This case reinforces the agency's ongoing commitment to enforcement, especially against blatant scams and fraudulent offerings. While Atkins may be steering the SEC away from broad, punitive enforcement as a policy default, this judgment shows that the agency won't hesitate to act decisively against clear misconduct. State versus federal, a diverging path. This week's developments present a revealing contrast. On one hand, California is emerging as a trailblazer in creating thoughtful crypto legislation, focusing on utility and protection. On the other, federal lawmakers continue to grapple with oversight lapses and internal tensions on how best to regulate the space. Congressman Gill's disclosure mishap illustrates the regulatory gaps in the nation's capital, while SEC Chair Atkins' comments suggest a changing of the guard in federal crypto policy. Meanwhile, the SEC's ongoing enforcement actions indicate that investor protection remains a top priority, even as the agency explores more collaborative approaches. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. China's DeepSeek predicts the price of XRP, Pepe, and Cardano by end of 2025. ChatGPT predicts the price of Cardano, Ethereum, and Solana by end of 2025. Why is crypto down today? June 5, 2025. Press releases. ChatGPT predicts the price of XRP, Trump, and Litecoin by end of 2025. Press releases. Leading AI Claude predicts the price of Ethereum, Cardano, and XRP by end of 2025. Press releases. Crypto price prediction today, June 5th. XRP, Solana, Cardano. Best crypto to buy now in June 2025. Top crypto to invest in. May 6, 2025. By Alan Draper. Best new crypto coins to invest in 2025. Top new cryptocurrencies. May 6, 2025. By Inesis Tavares. 13 best crypto presales to invest in 2025. Full presale list. March 3, 2025. By Alan Draper. 11 new and upcoming Coinbase listings in June 2025. April 13, 2025. By Elijah Rankovich. 13 new and upcoming Binance listings in 2025. May 5, 2025. By Inesis Tavares. What is the next big crypto to explode in 2025? September 11, 2024. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. October 19, 2024. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. August 28, 2024. By Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? August 28, 2024. By Ben Beto.